Chennai asking about RBL Bank. He's holding 75 shares at a price of 220. He's wondering whether he should hold, sell or average at the current price, and what target would you give for this counter?
Hold. You can even look to average at current levels. I think the stock has just given a breakout of its 200 moving average as well. I think today or yesterday. So I believe on the back of it, you should see the stock getting back into momentum. Would suggest a hold or an average at current levels for a target of almost 275 to 280 over the next 3 to 6 months for RBL Bank.
All right. Good morning, Kunal, as well as Gaurang. This one is for you. But actually, okay, let me take this one for you. This one is from Soumitra. He wants a fundamental view on Sequent Scientific and the impact of FATF grey list for Turkey on Sequent's prospects going ahead. Do you track Sequent Scientific? Gaurang, will you be able to give a fundamental view on that particular counter?
Morning, Cheryl, and morning to everyone. Unfortunately, we don't have a coverage, so I won't be able to comment on this one.
All right. Would you want to take this one? Kunal, no doubt it's a fundamental question, but on the charts, how is Sequent Scientific looking like? We've been having quite a few queries on this. We have Mr. Bharat also been asking about Sequent Scientific. As far as I know, that his buy price was about 300 rupees per share. So if somebody is already invested in Sequent Scientific, what should they do?
Well, I would suggest to stay invested. Today being, of course, one of the stronger moves for Sequent Scientific, and it seems that the stock is forming a good base and a bottom at this 180 to 200 mark for itself. So I think on the back of it, I would expect a steady recovery for the stock, and the next targets now for Sequent Scientific could be kept closer to 240 levels. So you should see at least another 20% upside for the stock over the medium term, and I would suggest a hold on the stock at current levels.
Okay, we've got a question from Chai. And this one's about all of the frontline IT counters, Gaurang. So Chai is asking, among TCS, Infi, HCL, Tech and Tech M, which is the best to hold for the very long term without considering the price at the present? I'm assuming what he means is that you can add over a period of time.
Well, the disclosure, Alex, we have coverage and all, but if I have to pick one of all these, then I would definitely pick up TCS.
Okay, this one is coming from Ujwal, and he wants a technical view on HDFC Bank, which he's holding from the levels of 1600 rupees per share. He wants to know whether he should book profit or wait some more time for some more upside. What's your take, Kunal? What should Ujwal do with HDFC Bank? Book profits or wait for some more upside?
I think it's a good level to book profits over here for HDFC Bank. Now, agreed, it's a top quality name, and the charts from a longer term view are very attractive. But specifically from a short term view, I think the recent candle on the downside, which the stock had shown 2 days or 3 days back, indicates that there could be slight bit of more correction into the stock. Maybe it could come back towards that 1600 mark. So booking profits at current levels, assuming it's from a short term view, could be a good idea for HDFC Bank. And if it comes back towards 1600 mark, that would be a good level where you can look to re-enter again.
Okay, the next question is from Clifford. And Gaurang, he's asking about a couple of steel names, Tata Steel as well as JSW Steel. Which of these two is better? And would you bet on, or would you bet on both and buy a little bit of both? And do you believe in the long-term prospects of steel as a sector?
I think this morning is turning out to be difficult for me, Alex, because once again we have coverage on both of them, and I would give equal weightage to both. And we at Geojit are extremely positive about the metal sector, given the infra push that the government is doing, and along with that, we also believe that private capex would also pick up as we go forward. So we remain positive on both Tata Steel as well as JSW Steel.
All right, this one is coming from Syed, and this one is for you, Kunal. He's saying he's bought SRF in huge quantity. The buy price is 2300 rupees per share. He's saying he's currently in loss. He has a short-term view. So what should he do? SRF Kunal, 2300 is the buy price for Saeed. If you see the stock is around 2100 rupees per share, do you think that it's makes sense for him to be too perturbed about it already and look to book loss, or should he just hold on to it? How are the charts looking for SRF?
It depends on what time frame the viewer is looking at. Now, if it's a very specifically short-term kind of a time frame, then I don't sense any major trends picking up for SRF over the next 1 or 2 weeks. The stock can remain in a downward trend to more of a sideways trend. 2050, 2150 could actually act as a more of a median range for SRF. So I believe that that's likely going to be the trend for the very, very near term. But if it's specifically from a longer term view, and if you can hold it, say, for another, maybe a couple of years, if not more, then I believe it could make sense to try and even look to average at every kind of a short-term correction which you get on SRF. It's been a classical stock. The stock has shown very good rebound as well as rally over the last decade and a half, and I believe in that sense it could be a good buy and hold kind of a candidate from a longer-term view. So it all depends on the kind of time frame. If it's very, very short-term, then I'm expecting more of a range-bound action for SRF.
Coming back to you on this next one, Kunal, it's an interesting question. Neeta is asking, no specific stock, but she's got a lump sum and she's looking to put this into the markets. She's looking to hold for 1 to 3 years. The amount is as much as 15 lakh. So would you suggest, peppering it into a few names or spreading it out over a period of time, and which counters look good to you for that time frame?
So yeah, I think from that 1 to 3 year kind of a time frame, you can look at chipping into sectors which have done brilliantly well over the last 14-15 months and which still look very strong from a long term view. So some of the names or some of the sectors which you can look at, of course, IT being one of the top candidates over there. I would probably suggest from the IT pack names like Wipro as well as Tech Mahindra. I think these are two classical stocks which have given fresh breakouts on long-term prospects and look very, very attractive. From the auto stocks, you can still look at Tata Motors. I think at current levels as well, very bullish on the stock. Have been bullish over the last 1 year as well, and maintain that stance. And I think this could be a very strong outperformer from current levels. From the other large cap names, you can look at maybe Reliance Industries, L&T. So I think if you can keep focus specifically towards large cap names on the banking side, you can look at even SBI and ICICI Bank at current levels. So with the kind of time frame which you have selected, and given the kind of market conditions where we are, I think these could be few names which you can look at.
Gaurang, this one is from you and this one is from Chaitanya, and he's asking, please suggest 2 fundamentally strong companies to buy from the pharma and healthcare space with good growth prospects for the longer term. It can be either in mid, small, large cap, it doesn't matter to him, and also saying that he has good risk taking ability. So which are those 2 stocks from the pharma and healthcare space that you would advise Chaitanya to look at?
Pharma, I would advise him to look at Cipla. We have just upgraded our targets on Cipla. And from healthcare, I would advise him to look at Apollo Hospital. The stock has run up, and then the run up, we've seen post that run up some correction and consolidation coming. I think these 2 would be ideal stocks for a long-term investor.
Okay. Certainly wants to watch out for in the healthcare space. All right. We've got a question coming in from Vinay Matthews from Kochi in Kerala. And it's similar somewhat, Kunal, to the previous question that I asked you. But the time frame is much shorter. So 3 to 6 months. He's got a lakh of rupees. He's a senior citizen, so he does not, I think, want to take too much risk. What would you suggest?
Well, I think in that sense, you can probably look at some momentum names. So I think something like ICICI Bank, for example, which I discussed earlier as a longer term play, I think looks attractive even from a short term prospect. Post the breakout, which you've seen a couple of days back for ICICI Bank, I think it would be in for another 15 to 20% upside, say over the next 1 year odd. You can look at even Tata Motors at current levels. SBI could be another stock which you can chip in at current levels. From the cement pack, I believe Ramco Cement and Ultratech, these are the 2 names also which look attractive to me on the short-term time frame chart. So I think these would be few of the other names which you can look at from a short-term view.
Okay, this one is from Nino Kuruvela saying that holding CRM Sills for more than a year, the buy price is 160 rupees per share. Should I hold or exit? What's your take, Kunal? CRM Sills, do you track this one?
The stock, share also won't be able to recommend.
All right, no problem. This one, I'll take another question then, and this one is from Sailaja. Wants to know whether she can buy Bajaj Finance and IB Infra at current market price for the shorter term. Both of these counters moving on back of news. Kunal, does it make sense to buy them at current market price?
Bajaj Finance, in fact, earlier on previous shows, I had recommended that if the stock breaks above 8,000 level, that could be a good level to enter the stock, rather than anticipating that the stock would repeat of the kind of results reaction what it has shown over the previous quarters. So I would still stand by with the with the view that I think Bajaj Finance could be a good buy only about the 8,000 mark, because that could probably confirm a range breakout for Bajaj Finance. So I think at current levels, I would give it a pass. Maybe look at some other stocks which are in high momentum. But I think if Bajaj Finance breaks past about 8,000 levels, then I believe it could probably swing up to at least a 10% upside further from those levels. So won't be in a rush or in a hurry to buy Bajaj Finance at current zone.
All right. Gaurang, I'm coming to you on this next one. We've got Mr. Radhakrishnan, who's holding LIC Housing Finance and Karur Vysya Bank, making losses in both. But he's, a long-term investor. He's wondering whether to shift to ICICI Bank or HDFC Bank. What would you suggest?
Not comment on Karur Vysya since we don't have a coverage, but LIC Housing, we definitely have a coverage. And I think this entire recovery in the real estate sector reflects on the positive side, Alex, on the housing finance sector as well. And along with that, you have a lower interest regime. You have more affordable prices from the real estate developers as far as offering of residential premises are concerned. And you've seen a largest uptick in terms of registration as far as certain cities like Mumbai are concerned, Alex. Having said that, I would advise him to hold on to LIC Housing Finance and even average at lower levels. And in case if he wants to, which was the two stocks as an alternative idea he's asking for, Alice? Can you please repeat?
ICICI Bank as well as HDFC Bank.
Well, by default, both switching to HDFC or ICICI would also make sense. Like I mentioned, holding LIC and averaging. But our view at Geojit is that, bad days for banking sector is over, and earnings recovery is definitely looking quite strong as far as whatever numbers we've seen. So just in case if you want to make a switch, you can definitely make a switch to both these names.
Okay, this one is for you, Kunal, and this one is from Mr. K.R. Balan. He's saying he has textile sector stocks, that's Indocount at Himmat Singh's side, that he's actually bought almost at the current market price levels. He wants to know whether he should continue to hold on to both these textile counters or look to shift to PSU banking names like Indian Bank and Bank of Baroda. Does it make sense, given that the run-up in PSU banks of late is definitely making a lot of them feel left out? So do you think it's a right strategy to move away from the textile names like Indocount and Himmat Singh's side and also go to Indian Bank or Bank of Baroda?
Well, I would suggest that rather than shifting the stocks because they are not in momentum, and shifting to some other names which are on high momentum may not actually turn out to be a good strategy, because you would keep on buying these high momentum stocks at a much higher price end, and if these stocks get into a corrective phase, you would probably look to sell the stock or exit the stock and then find maybe some other sectors in terms of high momentum. So you would keep on repeating the same mistake time and again. Rather than that, I would suggest that you should have a perfect or a balanced allocation towards, even if it's a short-term trading. So I think the names which you mentioned, like Indocount and Himmat Singh, I think they both look very attractive. They're going through their own silent phase of correction/consolidation at current levels, and I believe that you should probably be more patient over here. If you're looking to chip into some other name, then I think rather than looking at PSU banks, of course they look very attractive from current levels, but I think one of the other large cap names which I believe could be on the verge of a breakout, could be Bharti Airtel as well as Sun Pharma. I think these two names predominantly look very strong. So I would suggest maybe adding some fresh capital and looking at these two names as potential candidates of breakout from a near term.
All right. The next one's also for you, Kunal, and this one's on OFSS. Oracle is the counter. We've got Sunny who's asking, he's holding 40 shares at a level of 4,450 and he's looking at a mid to long term target for this. He's asking if you can also provide a stop loss.
OFSS, as compared to many of these other IT, IT hot stocks, IT mid-cap IT stocks, was a bit late starter. I think the stock broke out of its multi-year highs just about, I think, in mid of 2021. I think June, July is where the stock had actually broken past about those levels of 4,200, 300, which was its all-time high. So it was a bit late in terms of, compared to the other IT names. But it's trying to do its own bit by, trying to adjust and recover over the last 5-6 months of this breakout. So I would suggest that you should hold on to it. 4,300, 400, which was the previous breakout zone, that could probably act as a support or a stop loss. So if you're looking for a stop loss, that could be a level where you can look to exit. If the stock breaks below that, you can look to exit the stock. But I think you should hold on to it, given the fact that it's been a late starter and it's trying to cover up the underperformance as compared to many of its mid-cap peers.
Okay, this one is from Marion Portman. This one is for you, Gaurang. Which cement stock out of Ultratech, Shree Cement, Ambuja and ACC will turn out to be a wealth creator in the next 10 years? Any guesses, Gaurang? Which of these cement counters do you think will be the wealth creator in the next 10 years?
Well, I'll add another 3-4 names because for us, all of them are wealth creators and we have coverage on all of them. So starting with Ultratech, ACC, Ambuja, Grasim. Amongst the mid-cap names, Shree Cement, GK Lakshmi Cement, Ramco Cement, Dalmia Bharat, which has been a stellar performer since the beginning of this year, Cheryl. So if I have to pick one name, then I'll go with Ultratech. It's got the best capacities in place and it's got a great market share. Along with that, a very strong dealer distribution network.
All right, that's the view on the cement space. Gentlemen, it's time to hit the rapid fire segment. You know the drill. We're going to launch questions at you in rapid fire and you'll have to give us your answers as quickly as possible over the span of 2 minutes. Let's get started with the first one. Kunal, this is coming your way. Tattva Chintan is the name of the counter. I do not know if you have enough data. Would you buy at the current market price for the short term? This is from Puneet.
I would wait for a correction. Maybe at 2,500, 2,450 could be a better level to buy. The stock seems to have gotten to an overbought territory, so would wait for a correction to buy.
Okay, this one is from Zulfikar, wants to know about Deepak Nitrate. He's holding this particular counter for the last 2 years at an average price of 780 rupees per share. How does Deepak Nitrate look? Does it make sense for him to continue to stay put with this one, Gaurang?
Well, a strong company but no coverage, so can't comment why sell.
Okay, Bank of Baroda is the name of the counter, bought at levels of 85. This is a question from Chandan Jain from Hubli. Would you stay invested or would you book out at this juncture, Kunal?
Yeah, I covered Bank of Baroda on the chart busters as well. Looks attractive to me on the charts. I would suggest the hold. Revised targets on the upside could be at 125 plus.
Okay, this one also is for you, Kunal. This one's from Ajay. Can I buy Bajaj Auto at current market price with a 3-month view? It has given a bounce back again from the 200 DMA. So does it make sense for him to buy Bajaj Auto?
Well, I would suggest maybe shifting towards either an Ashok Leyland, Escorts or maybe Tata Motors. These could be a much better bet given the kind of momentum these stocks have shown.
Gaurang, a view on Coal India. We've got Prabhu who's holding at levels of 193. Is a long-term investor. Would you hold or would you switch to something else?
So we have a coverage and the targets are in place. So I would advise booking profits on rallies. And just in case if he does get that rally and if he wants to make a switch, I think Federal Bank would be a preferred alternative.
Kunal, this one is from Sagar, wants a technical view on Nelco. He's bought 500 shares at 200 levels, saying the stock has gone crazy now. So should he book profits or continue to hold?
You can continue to hold. On the upside, you can look at maybe the stock hitting back towards 900, 925 zone over the next couple of months.
Alright gentlemen, that brings us to the end of the rapid fire segment and indeed the query segment as a whole. Thank you so much for being as accommodative as you always are, and it's been a pleasure speaking with you once again. On that note, we're slipping into a short break. Viewers, if we've missed out your query, we didn't do so intentionally. We intended to take as many as we possibly could, and I think we did achieve that. Do stay tuned, lots more coming up in just a bit.